conversation, please start welcoming our moderator, Ms. Alpha Lau, Director General of Investment Promotion, Invest Hong Kong, the Government of Hong Kong's Special Administrative Region. In conversation with Mr. George Elhedery, Group Chief Executive of HSBC. Coming up next, Bill Winters, Group Chief Executive of Standard Chartered. And the Honourable Paul Chan, Financial Secretary, the Government of Hong Kong's Special Administrative Region, to start with his keynote address. Welcome them.
Hello, good morning, distinguished guests, ladies and gentlemen. I'm delighted to join you today, and I know we are all looking forward to the fireside chat with the group CEOs of two of Hong Kong's leading banks, a conversation that promises to be insightful and inspiring. But before we begin, allow me to share some points about the government's policy vision in driving forward fintech development in Hong Kong. In the financial sector, we firmly believe that digitalization is a transformative force that must be embraced. It enhances efficiency, reduces costs, enables more personalized services, and plays a critical role in promoting financial inclusion. Technologies like AI and blockchain hold immense potential, from automating processes and improving credit assessments to strengthening compliance and enabling near-distant, low-cost payments. But with these benefits come important challenges. Algorithmic bias, data privacy, investor protection, and risks to the financial stability. They must all be carefully addressed. To fully harness the power of digitalization while managing its risks, robust governance frameworks are essential. Just as important is close collaboration between the public and private sector to drive innovation forward. Allow me to share 3 key observations from our journey in building a vibrant fintech ecosystem. First, the ultimate goal of financial innovation is to serve the real economy and improve lives. One of the greatest promises of fintech is promoting financial inclusion, and we believe that innovative solutions and stronger data connectivity through public-private partnerships are key to unlocking this promise. A great example is the Commercial Data Interchange, CDI, launched by the Hong Kong MA in 2022. It enables SMEs to share business data with banks on a consent basis to facilitate faster and fairer credit assessments. Today, CDI connects 17 data providers, including government agencies, and has already supported over 71,000 loan applications, amounting to more than 58 billion Hong Kong dollar. And we are not stopping there. Work is underway to expand its scope further to include more data sets and use cases. For example, bringing trade and logistic data into financing decisions. Financial inclusion also means convenience. The faster payment system is a case in point. It has not only transformed local interbank transfers, but also gone cross-boundary. The FPS is now linked with the mainland's internet banking payment system, as well as Thailand's PromptPay, enabling real-time cross-border payment for users. We are also empowering startups as drivers for inclusive innovation. With around 1,200 fintech startups and companies in Hong Kong, we support their growth so that they can scale their solutions and prosper. For instance, through the Hong Kong Investment Corporation, we have invested in micro-lending platforms, expanding into Southeast Asia, helping deliver inclusive financial tools where the demand is accelerating. The second observation is that regulators can and should be enablers of innovation. In Hong Kong, our financial regulators have a dual mandate: prudent regulation and market development facilitation. For example, over the years, we have implemented a range of regulatory sandboxes that allow innovators to test new products in a controlled environment, receive timely regulatory feedbacks, and refine their solutions before going to the market. These sandboxes foster collaboration between regulators and innovators, often leading to the co-creation of entirely new solutions. One area where this is especially visible is tokenization, which is rapidly gaining traction, enabling faster, more secure, and more efficient transactions. That is why Project Ensemble was launched last year to explore tokenization assets, platform interoperability, and common industry standards. It is a collaborative effort involving both local and international players, and it reflects our belief that experimentation must evolve together with technology. I'm glad to note that Ensemble pilot will be rolled out, enabling real value transactions in tokenized deposits and digital assets. And tokenization is enabling a wealth of investment products such as tokenized money market funds. The government is also leading by example. Our issuance of tokenized green bonds has not only set a market benchmark, but also encouraged broader adoption of sustainable digital finance. Third is about responsibility and sustainability in financial innovation, especially in areas like digital assets and artificial intelligence. While we must encourage innovation, we must also ensure its real-world applicability, investor protection, and financial stability impact. When it comes to regulating digital assets, whether digital asset trading platform or stablecoins, we adhere to the principle of same activity, same risk, same regulation. In particular, our regulatory approach to stablecoins is clear. They are not intended for investment or speculation, but rather as a tool to facilitate cross-border transactions and real-world economic activity. That is why, under our licensing regime, approvals will be granted only to applicants that demonstrate genuine use case backed by sustainable and robust business models. We take a similar approach with AI. As part of government's broader AI Plus strategy, we are embedding AI across sectors, attracting global talent and enterprises, and encouraging cross-sector collaboration. But we also recognize the risks. Last October, we issued a policy statement on the responsible use of AI in financial services. It adopts a dual-track approach, promoting adoption while addressing risks like cybersecurity, data privacy, and IP protection. Ladies and gentlemen, as we mark the 10th anniversary of Hong Kong FinTech Week and the Start Me Up Hong Kong Festival, We are celebrating a decade of impact, ambition, and bold ideas. These two signature events have brought together visionary entrepreneurs, global investors, policymakers, and industry pioneers from around the world, all united by a shared belief that technology can make finance more inclusive, more efficient, and more human. By having you all, and with our concerted efforts, I'm sure that Hong Kong will grow stronger as a vibrant, future-ready hub for fintech excellence. Thank you. Thank you, thank you.
Thank you very much, Financial Secretary, for that very important overview. And as that brings us into the next part, which we're all looking forward to, two of the world's greatest bank CEOs with us today with the Financial Secretary.
Yep.
So I've got a few questions for the few of you, but if I may, I'm going to start with the Financial Secretary, if I could. So we are now, actually, you also mentioned previously, we are amidst actually the greatest changes in the century. 中文就是百年未有之大变局啊。So as China continues to embrace globalization while stepping up the collaboration with our Belt and Road neighbors and countries, there's actually a lot of cross-border investments and trade opportunities. So the role of Hong Kong as an international financial center is as crucial as ever. What is your personal strategic vision for Hong Kong in fulfilling this very historical mission?
Well, in face of this global geopolitical fragmentation and climate change, our response is to play to our strength and adhere to our core. As you know, under the one country, two systems arrangement, Hong Kong is uniquely placed because at the one hand, we are part of China. The wonderful connectivity will enable people to use Hong Kong to tap the mainland market. But at the same time, we are practicing, for example, common law, rule of law, independent judiciary. Hong Kong is a free port. So this is a very familiar environment for foreign businesses to operate here. So this is one direction. But I would argue that in the future, Hong Kong's role is a two-way platform. Besides global business through Hong Kong going to China, global investment flow through Hong Kong into this region, we are helping the wave of mainland companies going global to diversify their industry chain, their supply chain, and in the process, like CATL, for example, a recent IPO in Hong Kong, so far the largest one. They come to Hong Kong to raise funds to support their expansions overseas. And that would be an increasingly important role for us to play. And in the process, we are more than just providing finance because the professional services here is top-notch. And we adhere to the best international standard and practices. So we can be their risk managers and also as their professional guide in their endeavors overseas. So in conclusion, my role about Hong Kong in face of this challenging external environment remain very optimistic.
With all challenges comes more opportunities, right? So the next, if I could just turn to Georgia. As a leading global bank, can you share your macro view on how different international markets embrace innovation to power the economies? And in particular, what is the role in your mind that Hong Kong could play, and how is HSBC positioned to help shape the future of finance?
Perfect. Thank you, Alpha. And thank you, Financial Secretary. And I want to also take the opportunity to congratulate the organizers of this 10th edition of the FinTech Week. We're really proud to be partners for the last 5 years. Congratulations on an amazing venue and a display. So different parts of the world have approached this innovation differently. Take some examples. The US in particular has approached it with obviously leading edge innovation. They've approached it through massive investment, in particular in compute, specifically for Gen AI, and regulatory flexibility to accommodate the growth of alternative assets on the chain, such as stablecoins. Europe has approached it somewhat differently. Europe has approached it essentially through regulation. So put safety first. Obviously, it's very important to ensure safety is there, but that you don't stifle innovation with safety. So getting that balance is going to be critical. I think Asia, and in particular mainland China and Hong Kong, have approached it in a very interesting way. The first thing is the DeepSeek moment, where we realized it's not only a race for more compute for Gen AI, but it's going to be a race for efficiency and speed of delivery. And this was an eye-opener that it's not only about more, it's about how much more efficient can one deliver it. And that was really an eye-opener and transformation. And the other aspect to call out really in the Greater China space is the massive adoption of these technologies in Gen AI. So this has really been an eye-opener, and the speed and pace at which general public at large have adopted all these innovative items. So just calling out how we think the development is taking shape, and where are we as HSBC specifically operating. I'm proud to say that we are really at the forefront alongside many of our partners here in this innovation. So we have been the first to do a blockchain-based settlement in Hong Kong. We've participated with the e-Hong Kong dollar very early on. We are participating in Project Ensemble that the Financial Secretary has mentioned. And as recently as last Friday, my partner Bill here from Standard Chartered and HSBC have managed to successfully execute the first interoperable exchange of tokens. We've launched tokenized deposits starting in Hong Kong and now in 4, soon in 6 international locations that allow our customers basically to achieve 24/7 cross-border payment instantly and frictionlessly with the safety of a bank regulation for all sorts of financial crime-related matters. And then last but not least, tokenized gold, which has now become the 3rd largest tokenized gold on the planet and the largest here in Asia, with launched here in Hong Kong with mass adoption by retail customers as a very attractive means to own part of this asset class in a very friendly blockchain-based shape. Thanks.
That's very exciting indeed. Now, may I turn to Bill? As Standard Chartered Bank, of course, your strategy has strong focus in cross-border businesses, wealth management, and of course, sustainable finance. Now, we mentioned earlier, the Chief Executive mentioned earlier, as well as the Financial Secretary, there are more and more mainland companies now expanding globally. So can you elaborate more on how Standard Chartered will use your Hong Kong, but also particularly international networks such as Asia, Africa, Middle East, etc., to help mainland Chinese clients go global for the firms and the business owners themselves?
Great. I'd like to add my thanks to those of George and the Financial Secretary for, one, for having me, but two, for bringing such a fantastic group of innovators, entrepreneurs, and investors and end users together. It's fabulous to walk around outside and see the proliferation of innovation here in Hong Kong. Clearly become a destination. Of course, Standard Chartered is very, very happy to be participating year after year in what I think is becoming a stronger and stronger festival. Reflecting the stronger and stronger underlying innovation economy in Hong Kong. So back to your question, Alpha, thinking about mainland Chinese companies, which was the anchor of your question, reaching out to the rest of the world. Of course, as the largest trading nation on the planet, this is well established as a route, but it's taking ever more innovative forms. And I'm extremely encouraged to see that the role of Hong Kong in that internationalization is becoming more and more prominent. We all feel that every day. Hong Kong has a very special place in the internationalization of the RMB, the currency, the internationalization of Chinese trade, the stopping point or passage point for Belt and Road financing and other things. And of course, with these critical connect programs that have allowed money and assets to flow in and out of China in a seamless way, always with a special spot for Hong Kong in that relationship. So as we look to the digital economy, this, of course, is something that we're building on. I've been extremely encouraged to see the degree to which Hong Kong is being used as a test bed or a staging ground for innovations that we can only assume will become a forceful set of innovations in the mainland as well, as the entrepreneurism and innovation in mainland China finds its way into the international world. So this world of trade tensions that we're experiencing today, which is not new, the evolution of a diversification of global manufacturing across the world, from China, largest manufacturer in the world, likely to remain so for some time, but with the nature of that manufacturing changing, of course has had a very profound impact on Southeast Asia, as you mentioned in your question in Alpha. And initially, that took the form of investments by Chinese and non-Chinese companies, diversifying supply chains, enriching supply chains. The addition of differential tariff rates is accelerating that in some ways, although we know we're going through a period of uncertainty. I wouldn't say that we've fully captured the digitized nature of those flows as yet, but we will. And having innovations like the ones that George described, the tokenization of deposits being led in Hong Kong, the establishment of Hong Kong dollar stablecoins as obviously the Hong Kong dollar having a special place as a currency that's tightly managed against the US dollar, but at the same time is freely exchangeable and operating under the Hong Kong regulatory regime, becomes a really interesting currency of exchange, or medium of exchange, for international trade. So we've got the pilots in Hong Kong and then using the Hong Kong digital assets one way or the other as mechanisms for trade globally, which I think will smooth the evolution into the new international trading order on wholly digital terms in a way that should suit Hong Kong quite well. And that, of course, is part of the objective.
On Hong Kong as an IFC, if I may supplement one point, I just came back from Middle East leading a business delegation there. And one observation is that the IFC status of Hong Kong in terms of connectivity, we all know the connect schemes with the mainland, which has proved to be very successful. But I think at the same time, this could be extended to other markets. Say, for example, we have leased ETF tracking Middle East companies, and at the same time tracking Hong Kong companies. This is two-way flow. But in the future, it seems to me it would be very interesting for Middle East companies in Southeast Asia, to come to Hong Kong for listing. Because on the one hand, they can tap international capital. But on the other hand, if they manage to be included in the Southbound Connect, they would be able to tap also mainland liquidity. That would be a huge push in terms of their liquidity and valuation. And that is a very attractive proposition to them as well.
Excellent. I think that would actually lead me into my next question, other than the Stock Connect and Southbound. I'm going to do a quick answer type of questions. First, for Financial Secretary. So, widely reported, Hong Kong will overtake Switzerland very soon to become the #1 cross-border wealth management center in the world. What is your view? What is the priority in attracting even more asset allocation, and how do we use technology?
Well, we have wonderful ecosystem, excellent products, professional services. So, and on the other hand, mainland is our backing. Even with GBA, huge size, population-wise, wealth-wise. So we are very confident. And we'll keep enhancing ourselves, promoting our competitiveness.
No doubt we'll do that with our partners, particularly two banks. So quickly, Bill. Standard Chartered, of course, leading player in digital assets, the first custody partner of the SFC licensed asset manager behind the first tokenized money market fund. So just to quickly share, what is your vision on how financial innovation out of Hong Kong could help set the standard for not only Asian standard, but global standards in financial innovation and financial inclusion?
So we start with a philosophy or a belief. Our belief, which I think is shared by the leadership of Hong Kong, is that pretty much all transactions will settle on blockchains eventually, and that all money will be digital. Think about what that means, a complete rewiring of the financial system. But we don't know exactly how. If we knew exactly how, we'd have a plan and we'd do it. So we're experimenting. A lot of that experimentation is happening right here in Hong Kong. So I think it starts with a belief, and it starts with a need to experiment, to test, to learn, and then to put the appropriate regulations around that. Hong Kong has already established that leading role And I have every reason to believe that Hong Kong will play that role. And this is not just a Hong Kong and mainland China issue. This is for the world. And we're a full part of that, totally supportive, and thankfully aligned in expectations around the end state.
Thank you. So, and of course, HSBC has also been a very staunch supporter of the Hong Kong as our government in financial innovation. So, and of course, you also have your innovation banking business of Hong Kong for the whole of Asia, right, George? So quickly, do you think, would you elaborate more on how you plan to connect all these dots to power, of course, the innovation economy of the future?
Thank you, Alpha. So I can spend the next half hour explaining why we believe Hong Kong is the right place, but I'm going to give you one piece of information. On the 9th of October, HSBC has announced an investment of more than 100 billion Hong Kong dollar in Hong Kong for the acquisition of the minority shareholding of Hang Seng Bank. This hopefully summarizes how much confidence and how much conviction we have in the outlook for Hong Kong, financial and technology. But a few other items. Innovation banking has been launched in Hong Kong. It's a fantastic ecosystem to connect innovators with venture capital, with regulators, with the finance world together. And Hong Kong as a major fintech innovation hub, #1 in the world, is uniquely placed to be able to capture that. Second is that we have partnerships with multiple universities around the world, in particular with the Hong Kong University of Science and Technology. And that partnership is to support nurturing STEM talent and capable talent to drive the next phase of innovation. We are also supporting, #3, we're supporting a number of students with scholarships to help them get through these fantastic or amazing studies and become major contributors to Hong Kong. So this platform is bringing up some of the best STEM talent in the world, and we're very proud to be working with them, partnering with them, employing them, and hopefully in the future having them also lead a number of our initiatives.
Excellent. Thank you, gentlemen. As we conclude today's discussion, it is clear that Hong Kong's strength lies not only in the status as one of the world's top 3 international financial centers, maybe top 2 soon, but also in our ability to keep evolving, right? So once again, Financial Secretary George Bill, thank you again for all your insights and for joining us today in this important dialogue. Thank you again.
Yeah, thank you.
Thank you very much.
Thank you. Yeah, thank you.